There is a number sitting inside the XRP market right now that almost nobody is contextualizing correctly. $1.44 billion. That is the cumulative net inflow into spot XRP ETFs since they launched in November 2025. Goldman Sachs is in. Bitwise is in. Fidelity is in. Institutional whales are accumulating approximately 11 million XRP per day according to on-chain data. Exchange balances have dropped to their lowest levels in years, meaning liquid XRP is quietly disappearing from the market. And yet, the price is sitting around $1.40, down from its 2025 peak near $3.50, down over 60% from its cycle high. Flat. Bleeding. Going nowhere. So here is the question that this video is built around. How does $1.44 billion flow into an asset with institutional names attached to it that don't make reckless bets, and the price still looks like this? What is happening underneath that number that the headlines are not explaining? Picture a bathtub with the faucet running. Water is flowing in, steadily, visibly, measurably. But the drain is also open. And right now, the drain is winning. That is the structure of the XRP market in 2026. The faucet is institutional ETF demand. The drain has a name too, and it is the one number the bullish XRP narrative consistently fails to address honestly. Ripple holds approximately 37 to 40 billion XRP in escrow. Every single month, up to 1 billion XRP is released from that escrow into the market. Not all of it gets sold. Ripple returns a portion. But the structural supply pressure this creates is constant, predictable, and large enough to absorb significant demand without moving the price meaningfully higher. $1.44 billion in ETF inflows sounds enormous until you calculate it against the dollar value of monthly escrow releases at current prices. The math becomes far less dramatic. This is the mechanism most retail participants never see. They watch the ETF inflow number. They feel the FOMO. They do not look at the other side of the ledger. But here is where the picture fractures, because the escrow argument alone does not explain everything either. XRP exchange balances are genuinely falling. On-chain accumulation by large wallets is genuinely accelerating. The SEC lawsuit that suppressed institutional interest for 5 years is genuinely over, settled in August 2025, with XRP formally recognized as digital commodity by both the March 2026. These are not narratives. These are structural changes to the asset's legal and institutional standing that did not exist 18 months ago. Two forces. Real demand building underneath. Real supply pressure from above. The price is the scar left by their collision. What Wall Street is not telling you is not secret conspiracy. The $1.44 billion that has already entered XRP ETFs did not arrive because the price was going up. It arrived because the legal structure finally allowed it to. The price move, if it comes after the position is built. After the escrow dynamics shift. After the legislative clarity lands. After the moment when the chart stops looking broken and starts looking obvious, which always, in hindsight, exactly when the window had already closed. The bathtub fills slowly when the drain is open. But drains can be closed too. This is not financial advice. It never was. XRP can fall further. The escrow pressure real. The macro is uncertain. No on-chain metric and no institutional inflow number guarantees any outcome in a market this volatile. Always do your own research. Always consult a qualified financial professional before making any decision with your capital. But $1.44 billion went somewhere. And it did not go there by accident.